Good day, everyone. My name is Mario Santoso. I'm from IPMI Executive MBA class of March 2021. I'm creating this video to share and explain about my mind mapping of corporate finance course. This is required task to pass this course. I'm very honored and happy to have this class and taught by famous professor in economy, Professor Roy Samble. Actually, this is a very difficult subject because I have no finance background before. But Professor Roy brought the material in a very interactive and well structured, so I can understand the topic of finance. Okay, I'm starting from the objective of the corporate finance course is to give student problem solving skills in finance from the point of view of management, internal or inside out, and investor, external or outside in. The participants are expected to be able to explain the important financial management decisions and interlinkage among them, apply financial management decisions making tools in analyzing financial decisions problem, explore and evaluate the opportunities to create financial values to the firms and investors, utilize logic and corporate finance to improve participant decisions in other business-related situations. Demonstrate ability to discuss in a structured way hot issues that emerge in the business or financial media. So this is my mind mapping. One by one, based on weekly class, and I group it into 5 different groups that completes overall aspect in financial management. First week, the class was started with the introductions to the financial management, and this is the definitions of financial management. Optimal orchestrations of internal and external financial resources towards significant and sustainable value creations. And next, what's goal? What is the goal of the financial management? The goal is significant and sustainable value creations. It will be about a profit and wealth maximizations. So what to manage? There are a lot of things to manage. First, like capital structure. Second, working capital management, asset structures, revenue management, cost management, cash flow management, growth management, and risk management. Relationships among corporations and financial market is described in the course as well. That how the money flows from financial market to corporations and back to financial market and government. The number of figures are important, but the people or story behind are equally important or even more important. That's why we know about our principal agent problem, good corporate governance. So for principal agent problem describes conflict that happened around the principal or the owner and the agent or the management. So there are 3 conflicts, common problems like conflict of interest, asymmetric informations such as it's like it's like a situation where principal and agent possess different information about transactions. In most cases, agent is more knowledgeable than principal. For example, like situations determining the target sales number. And then the third is problem is moral hazard. There is tendency of few people only to do kind things for all situations. So solution principal agent problem is the combinations of many things from recruitment, selection, development, evaluations, bonus package, and so on, so forth. Those cannot be eliminated, but we can reduce the impact. In the worst case, they can replace the manager. Good corporate governance relates to the tariff, transparency, accountability, responsibility, independency, and fairness. This concept, this is the concept that a company should have to create the value. And then we learn about four cornerstone of corporate finance. This is the basic to create value. For example, like return on capital, growth, and cash flow. We learn also about 5 business essential based on Ramcharan. He got through the observation in the shoe store. They are cash, profit margin, velocity, growth, and customer focus. And next, in the second week, we started to learn about the investment fraud topics. So if you know investment, there are so many forms. Yeah, it's like government bonds, share, public listed companies, forex, and so on. And how to avoid the investment frauds based on Professor Resambel. He recommends us to go find the details on the company legality, OJK permit, legal product, detailed contract, and mechanism of the transactions. For example, like when to pay and the time value of money. And then we learn about time value of money. Yeah, we translate $1 today into the future. We call it compounding, and then we translate future into today equivalent. We call it discounted. The concept of this we can see in daily life, like if you want to have a KPR, mortgage, life insurance, investment, and so on, so forth. And then we know the term of Rule 72. This is an instant concept of time value of money or doubling the investment. And then I learned about capital budgeting, which is a planning process for investment in long term. Capital budgeting concept are to estimate expected future cash flow and evaluate the project based on capital budgeting evaluation criteria and decide whether the project is good or bad. So we learn about cash flow, payback period, NPV, profitability index, IRR, and then when the NPV and IRR has good result, conflicting each other. So what should we choose? We should choose the NPV because NPV is more conservative than IRR. And then the third week, the third week we learn about investment strategy. So in principle, people will buy lower and sell high. The one that we need to pay attention is fundamental analysis and technical analysis for fundamental analysis. It is a method that is used for measuring the intrinsic value of a stock or security. It mainly depends on the economic factors affecting the business and its financials. Tools for fundamental analysis can include everything that is present and can be derived from the financial statement, management discussions, and business plan. In this, we will know a financial statement like balance sheet, income statement, cash flow, and its analyzing, including profit, liquidity, activity, leverage, market ratio analysis. In the class also, we are given the task like PT XYZ, is it healthy or not? So the answer is analysis can be right or wrong, but needs historical trend. The historical trend combined with DuPont analysis will give more comprehensive data analysis. Yeah, the DuPont analysis is a useful technique used to decompose the different drivers of ROE or return on equity. And the decomposition of ROE allows investors to focus on the key metric of a financial performance individually to identify strength and weakness. And then we know the Altman score also help to know if the company is heading to bankruptcy or not. And then we learn about technical analysis. This is to evaluate investment and identify trading opportunities in price trends and patterns seen on the charts. If you can see the charts on the right, there are that's a candlestick chart, and then we know the special term like momentum, reversal, double bottom, double top in this analysis, technical analysis. And then in the fourth week, we learn about capital asset pricing model. This is consists of beta, variance, risk-free rate, market risk premium of our portfolio investment. So what's beta? Beta is a measurement of a volatility or systematic risk of a security or portfolio compared to the market as a whole. Beta equals 1 means overall market movement risk is the same with systematic risk. Beta less than 1 means our portfolio systematic risk is half of the market movement risk. Beta more than 1 means that your systematic risk double the market risk. Actually, beta is a long-term concept. It's more for more accurate, beta should be calculated around 10 years data. The variance show spread out the returns of a specific security are on a daily or weekly basis. Capital asset pricing model was described by William F. Sharpe in 1989. And he got a Nobel Prize economic from that theory. He has student Chuan Hoan, and Professor Roy is the student of Chuan Hoan. And we are the student of Professor Roy. So we are lucky to have connections. And yeah, we have connection with the great-grandfather of capital asset pricing model, William F. Sharpe. Then we learn about capital structures. We learn about capital structures theory based on Modigliani-Miller theorem, which states that a company capital structure is not a main factor of its value. In the theory, there is no transactions cost on taxes, which is not applicable in the real world. From the theory, we go further to the optimal capital structure should be like. There are two factors that affecting optimal capital structures. For example, like tax benefits and then financial distress. And so for tax benefits, it includes profitability, tax rate, and interest rate. For financial distress, it includes volatility, cash flow, liquidity, good corporate governance, and Altman score. And then in the week fifth, we learn about corporate restructuring, starting from a financial distress of a company where a company showed early in payment, less performance until they bankrupt. Yeah. And then we learn about RGR case, LBO, leverage buyout. In this acquisition, this is LBO is like acquisitions method of the company in unique way. LBO step by step in the RGR case, first KKR buys small part of RGR share. KKR became management of the company with approval from stakeholders, and the second KKR issue junk bond, then get the cash from it. The debt ratio become high in the step. The cash is used to buy the rest of share. So KKR became dominant. And then the third step, they will sell the company one by one, sell with the benefits. LBO is good or bad? It's relative. It's relative. This is actually it's good in term of value creations. And then we are asked to learn about the film. Recommended film to watch are Wall Street, Others People Money, and Trading Places. From the Wall Street, there is quotations, interesting quotations like from Michael Douglas. Grit is good. This is very interesting because there is no exact answer. This is about passions for improvement. And then we also touch about legal, unlegal, ethic, and ethic topics. Last topic in the week 5th is a fraud risk management. So this explain fraud triangle consists of opportunity, pressure, and rationalizations. This describes why people commit to fraud and how to prevent the fraud. For example, like creating whistleblower mechanisms. And then in the week 6, we learn about international finance. There are some points here. First, we know about exchange rate, starting from gold standard when transformed into the exchange rate that is affected by purchasing power and cost evaluation, devaluation, and so on. And then we learn about forward market and future market. Forward market is kind of contract to buy or sell asset. Future market is a specific type of forward market which is traded in organized market. And then we learn about options. We learn about American options, which is more flexible than the Europe options. And then we learn in the week 7, we learn about Black-Scholes about options, still options, but with the Black-Scholes formula. And then we learn about financial arbitrage, which is purchase and sell in the same of the same asset in different market. Exchange rate, in the bigger picture, we know the factors that causing exchange rate. And then next we learn about market efficiency by Eugene Fama. Actually in this topic, we are compare our portfolio to overall market, and the result was we hardly win over the overall market. It is aligned with the Eugene Fama theory on the market efficiency. So why? Market possess all informations, so we hardly beat the market. We also learn about random walk from Burton Malkiel, which explained that when the new information arrives, price react instantaneously. Since new information is that which cannot be predicted, it will arrive at random points in time, and this is called random walk. In week 8, we learned about dividend policy. We had interesting debate on paying dividends. There should publicly listed company pay dividend. So in conclusion, dividend is relevant because of first tax benefit, and the second is to show the company is healthy, and if the company give the consistent dividend. Yeah, so I grouped into 5, and hopefully you can get the benefit from my sharing. Thank you, Prof. Roy Sample, and everyone to listening my mind mapping. Our smile is for you.